Good morning, everybody. Thank you for joining the ACA Small Business Bootcamp and Resource Collective for this Thursday, September 24th. I am Robert Theobald, the Small Business Ombudsman and Vice President of Small Business Services here at the Commerce Authority. We are excited to have you here today. Again, we want to first start by thanking all of our community partners. We cannot do these bootcamp sessions without their support and expertise. And their efforts and time that they've dedicated to help the small businesses throughout Arizona. As a reminder, the Small Business Bootcamp and Resource Collective is designed to help small businesses work through the COVID crisis and return to business stronger than ever. It is a statewide initiative supported by our community partners, and just an example of that is today's session. Our presenters are from both Flagstaff and Page, so we've got help all the way up to the northern Arizona border. So we're excited to have them with us. And the boot camp is going to continue on through at least October, and I believe we're going to continue on the content through November and December as well, as we can continue to find content that helps support small businesses through this period. So Small Business Bootcamp and Resource Collective website has a lot of great information. It's got all the previous webinars we've done. Today is the 83rd webinar. And the previous sessions, so 82 of the sessions are recorded and available to review, to go back and review, watch the content, download the materials that were provided. And we have sessions on PPP and loan forgiveness. We also have an upcoming one on PPP forgiveness as well. There's guidance on running your business, marketing, etc., leadership, lots of great resources on there. So please go back and view some of those previous sessions as well. On that same page, you can have the link to register for upcoming sessions that we have planned. Also, you'll find the Resource Collective. And the Resource Collective is where our community partners have their tools and resources and guidance to help small businesses. That's where we post it and house it. It's full of a lot of amazing resources. This is just a simple example of some of the resources that you can find on there. Reopening guides for restaurants, guidance for retail, support for manufacturing, support for construction, barbershops and salons, cosmetologists, etc. So a lot of great information on the Resource Collective. So looking forward to next week. If you can believe it or not, I noticed this walking through a big box retailer today, that their Christmas decorations were set up. And we are also looking at that for next week's sessions are related to the holidays, and elevating your business for the holiday season and boosting your holiday sales through social media. We are having some planning and marketing stuff for the holidays, because the holidays really start now. For small businesses, you need to be looking ahead a few months. And so we wanted to get some of that information in your hands so you can have the best holiday season possible as you wrap up 2020. Some quick updates. We have 2 webinars a month for rural communities, Empowering Rural Communities webinars. There's the link to find those on our website. Additionally, for those businesses that are still looking for some support, if you did not apply for the Economic Injury Disaster Loan Program, it is still open and available. And even if you did, you may reach out to them and see if there's possibilities of upping your loan based on your current needs. I would suggest that if you need to do that, that you work with the small business development centers on looking at your business plan and your financials to do so. But that program with the SBA is still active and open. And then today is the final day of the SBA's National Small Business Week. There's a few more sessions you can view today live, and then they've got some recordings as well. And you can find that link on sba.gov, National Small Business Week. Quick reminder for the state's COVID-19 information and resource page, arizonatogether.org. And then a reminder of our COVID-19 business resource page at azcommerce.com/COVID-19. So to support small businesses, we want to remind everybody about our small business programs that you can leverage, our small business services. We can help with navigating through SBA, working with the SBDC. The boot camps are part of that. Our workforce division can help work with employers looking to hire or upskill or train their employees. And our manufacturing extension partnership, Arizona MEP, can work with manufacturers that want to help grow and scale their business as well. Additionally, got a lot of people looking at starting their own business. After the struggling time, they want to look and see how they can have their own business, and the small business checklist is a great tool to help you identify the resources, the planning and licensing with your ideas. You can find that azcommerce.com/smallbiz, B-I-Z. It's a great interactive online tool for you. So with that, we want to introduce our speakers today. We have Gina Couillard she's the director of the Coconino SBDC, and Cindy Scott, who is a business analyst with the Coconino SBDC. Gina's been on before. Some of you may have seen her previous presentations, and we have a great partnership with the Coconino SBDC, and we appreciate their time. So Gina and Cindy, I'm going to go ahead and turn the time over to you.
Okay. Give us just a second to get our slides up. So welcome everybody, thanks for joining us. Again, I am Gina Couillard, the Director of the Small Business Development Center in Coconino County, and joining me is Cindy Scott, our business analyst who lives out at our Page campus. So who is the SBDC? The Coconino Small Business Development Center is hosted by Coconino Community College. We provide free business counseling services for small businesses throughout the county. We're part of a larger network that covers on both the state and national level.
Gina?
Yes?
Gina, we're having problems with your microphone right now.
Okay, can you hear me now?
Yes, that's better, thank you.
Okay, sorry. The SBDC provides advising, training, online courses, disaster assistance, and other resources. If you have questions, like register for counseling, you can do so at the link below. I'd also like to thank the Arizona Commerce Authority for hosting this webinar and inviting us to partner today. Lastly, before we move on, I just want to let all of you know that we will be sorry guys, I see that, and I'm working on it.
Gina, try stopping your video feed, because we got your slides up. The video feed can sometimes mess up with bandwidth. Is that better? Yes. Okay.
Sorry about that, guys. We practiced this yesterday and had no problems. So with that being said, we are going to open the link at the end of the presentation for questions. So you guys can put questions in the chat, and we will answer those at the end of the presentation. With that being said, I'm going to hand it over to Cindy.
Thank you, Gina. Can you guys hear me okay?
Yes.
Okay, great. So the effect of COVID has really changed the way that we think of our business finances. When it hit, there were many questions about the future and how each business was going to fare. Questions like, how much are we really making? Where can we cut costs? Can we afford our employees? Do we qualify for financial assistance? Although these questions may have been asked prior to COVID, it's even more important to answer them now. This pandemic has really influenced businesses on a whole new level. Financial statements play a huge role in answering those questions. In this course, we are going to discuss what financial statements are made up of and how they can help you run your business. There are 4 basic financial statements. The income statement, which is also known as the profit and loss statement, the balance sheet, the statement of owner's equity, which is also known as the statement of retained earnings, and the statement of cash flows. The 2 main financial statements, and the ones that you will probably use the most, are the income statement and the balance sheet. The other 2 financial statements just provide a supporting role and help bridge the gap in information. Financial statements are used by many individuals and organizations. The most common and most important users are the owners and managers. They'll use the financial statements to identify costs that can be cut or see where the current month's sales compare to last month or whatever. There are others who would be interested in the financial statements of the business, such as suppliers who might be willing to extend credit, banks to see if the businesses qualify for a loan, tax authorities to compute the tax liability, investors to see if they would like to invest and what their risk might be, or perhaps customers to see if you're going to be in business long enough to honor your service and warranty for the item that they purchase, and even employees to get information on profit sharing if that's an option in your business. Millions of business decisions are made based on financial statements. The balance sheet uses the accounting equation to ensure the business assets are in balance with its liabilities and owner's equity. It shows everything that is owned and owed in a business. Assets are something that is owned, for example, equipment, vehicles, inventory. Liabilities are things that are owed, such as loans and lines of credit. And owner's equity shows the amount the owner has invested in the business. Those items that make up the balance sheet show a picture of what the business has, but it is not a complete picture without the income statement. So the income statement is also known as the profit and loss statement because it shows the amount of money the business has made or lost during a specific amount of time. It shows the revenues that a company has made, and it reduces those revenues by the expenses of the business to give a net profit or loss for the business over that specific period of time. To complete your financial statements correctly, it is important to understand what information is presented on each financial statement and how it is treated. So remember that assets are what the business owns. So think about the things that your business owns. You most likely have a checking account. Do you own a building? Do you use equipment to make your product? Do you have a company vehicle? All of those things are assets. There are many types of assets in a business. There's tangible assets, which would be like your money in your bank account, any buildings that you own and equipment. There's intangible assets such as branding and trademarks, living assets such as plants and animals, and moving assets such as automobiles and drones. Liabilities are what the business owes. So think about what your business owes. Do you have a loan? Do you have sales tax that you need to pay? Do you have a credit card that you use for your business? All of those things, loans, credit cards, and taxes payable would all fall under liabilities. Expenses are part of what the business spent. So think about what your business spends money on. Do you pay rent? Do you pay for utilities? And do you have a cell phone that you use for your business? All of those things, as well as other things like insurance, supplies, and travel, are all considered expenses. All of these things are recorded in the chart of accounts for the business. No matter what your system of bookkeeping is, it always starts with the chart of accounts. The accounts provide a place for each transaction to be recorded and tracked so that they can be used to compile reports and financial statements. Notice that the account type column, we have assets, liabilities, equity, revenue, expenses. So all of those things are make up the balance sheet and the income statement. That's why those two financial statements are used the most. Together, they provide a complete picture of the business financials. And all the other financial statements that are completed are just to show additional details. The accounts on the chart of accounts, and of course the financial statement information, would change based on the business. So what type of business you have, all the businesses are very diverse and will have different expenses and revenue streams based on what they do. So think about what you have on your chart of accounts. Most likely there's differences between our chart of accounts that we're showing here and the chart of accounts that you use in your business. Most businesses in this day and age use accounting software that compiles data into the financial statements and reports that are needed. However, if you don't understand how it's generated or where the information comes from, then it's more difficult to understand the financial statements and more difficult to spot errors and issues. You may have heard the term before, GIGO, G-I-G-O. It stands for garbage in, garbage out. If the chart of accounts is not configured correctly, so if you have a liability showing in the assets section, for example, or something to that effect, or if the information is not entered into the system correctly, then obviously the financial reports would not show the correct information. So let's take a look at how to prepare the financial statements. Can everybody see my Excel spreadsheet?
Yes.
Great. Okay, so I have created a sample chart of accounts here. And you can see that each of these accounts have a balance for the ending balance of 2019. So it's just showing that balance there. Notice that this chart of accounts has the assets, liabilities, owner's equity, revenue, and expenses. So they're all represented here. And then underneath it, it shows those items that would be considered assets, liabilities, owner's equity, and so on. So even though it's set up a little differently than the chart of accounts that we presented earlier, it still represents a good chart of accounts. So financial statements have to be compiled in a specific order so that the information needed is available when it's prepared. The first is the income statement, and then the statement of owner's equity, then the balance sheet, and then the statement of cash flows. So if you take a look at this income statement, notice that the information needed for this report is based on how much money we are making and deducting the expenses. So you have your sales here, and then you have your expenses here. And when you do all the computations here, you will end up with net income or loss, depending on what's going on in your business. This income statement is for a inventory business, a business that sells inventory. So we also have a cost of goods sold section. The next financial statement that we create is the statement of owner's equity. And the reason that we wait until after we complete the income statement for that is because we need this net income or loss for our statement of owner's equity. We put it right here. Then we will bring in the contributions and deductions from owner's equity and calculate the balance of the owner's equity at the end of the year. The balance sheet is next, and the reason that it's next after the statement of owner's equity is because it needs the owner's equity total for the end of the year to put in this area here. Notice on the balance sheet that we have assets and liabilities and owner's equity. So there's two sections of the balance sheet. We're going to talk about that a little more after we complete the balance sheet and kind of take a look at how that works. The last one that we compile is the statement of cash flows. This report provides more detailed information about what affected the change in the cash flow over the period. It is used to tie the information provided on the other financial statements together and show the amount available at the end of the period. So let's get started. So I'm going to switch back here to the income statement. And let's take a look at what it's asking for first. It's asking for sales. So we're going to go ahead and we're going to go to the sample chart of accounts here, and we're going to look for sales. And remember, that will be in the revenue section. So we're going to take that number, the 567,004, and we're going to put that in that section. Then we're going to go ahead and find the sales returns and allowances here. And that computes our net sales. So the next thing that we need is our cost of goods sold. Now this is asking for the inventory as of January 1st. And I don't have that in my chart of accounts that I've prepared here because that would have been at the beginning and I'm looking at only ending balances, but I can tell you that that's 52,000. Okay. Then we're going to go get our purchases. So we're going to go back to our sample chart of accounts and we're going to find how much we spent on purchases. So that's the 321,500. And then freight, 9,800. We have purchase returns and allowances as well, so we want to put that in there. And any discounts that we received for paying early or whatever that may be. So now it's computed. Other than this, we need our inventory. So we're going to go back here, grab our inventory, 47,178. And now it's computed our cost of goods sold. So out of the $554,000 that we sold, the cost of goods sold was $329,942. So we have a gross profit on sales of $224,562. Okay, so advertising under operating expenses is next. And for the essence of time here, I'm going to go ahead and just copy all of these. These are all my expenses. I'm just going to copy them over and paste them here. And my total operating expenses, which now comes off of my gross profit, is $168,423, and that leaves me with a net income of $56,139. So now we're going to take $56,139 and we're going to put that in this spot here on the statement of owner's equity. So now we need our balance from January 1st for our owner's equity, which is actually here. So this is 61,221. Oops. 61,221. We have our contributions, any contributions, which are 4,500. We have our net income as we're supposed to, and then any draws, which we see here we had 27,600 in draws for the company for that period of time. And that gives us a balance of 94,260, which we're going to transfer over to our balance sheet. Okay, so now we're on our balance sheet and we need to fill in the rest of the information. So we're going to go back to our sample chart of accounts and we're going to look at our cash, inventory, prepaid expenses, furniture and equipment, and accumulated depreciation. Those are all assets, as we know. So I'm just going to go ahead and copy these and put them over here. And you can see that our total assets are $129,409. So now we're going to go get the information for our liabilities. We have two, they're accounts payable and loans payable. So we're going to go over here. We're going to grab our accounts payable and loans payable. Go back to the balance sheet and put that information in. So remember earlier, I told you that we wanted to look at this again. So our assets section has a total of $129,409, and our liabilities plus owner's equity section has a balance of $129,409. So see, these two numbers should balance. That's why it's called a balance sheet, right? So that's in line with our accounting equation, which is assets equals liabilities plus owner's equity. The last statement is the statement of cash flows. And the statement of cash flows we're just going to go ahead and in the essence of time, I'm just going to go ahead and talk about what we put in here. So we did take the net income over from the income statement. So we took that number and put it here. And then we calculated the expense, the depreciation expense over the year, the inventory decrease over the year, the decrease in prepaid expenses over the year, and got our total adjustments. And this would be our net cash from operating activities. If we purchased any equipment, we would put that in this section. So any kind of investments that we made, we would put in this section. And then in this case, we didn't make any over the year, so there was nothing in that section. And then we put in our owner information as well. So any contributions and any draws that the owner took, and that would give us our net cash from financing. So notice that then we put in our cash balance as of January 1st, and notice that now it says our cash balance as of December 31st. So if we look over here on our chart of accounts, you can see that the cash balance as of the end of 2019 is $45,356. So looking at the financial statements that we have compiled, you can easily see how this information can help show what's happening in your business. Historical data could help to show growth in the business over time as well. So imagine looking at the information from the 2018 financial statements and comparing it to the 2019. So let's say you had 2019 here and then 2018 here, you could easily see the differences between the numbers and see if there's growth happening. You can see how expenses affect your income, and you may use that information to identify expenses that can be cut back. It can also show trends that would help determine what might happen in the future. For example, maybe it would show you that October is your worst month for sales. Then you could focus on your attention on promoting in October and help boost those sales. Or you might see that November is your best month for sales and your business is really busy then. So you might want to go ahead and adjust your employee level during that time to continue providing excellent customer service. Financial statements are a powerful tool for business owners and managers. And now we're going to go ahead and send it over to Gina. She's going to talk to you a little bit about financial forecasting.
Hi, everybody. Can you hear me now, or am I still sounding garbled?
You sound good.
Yep.
Okay, crossing my fingers that this works. Waiting for the slides to come up. Give us just a second. So as we move forward and we talk about financial forecasting, two of the categories that we need to think about in terms of financial forecasting is really our variable cost and fixed cost. So let's talk about our variable cost. Variable cost is a cost that changes. So things that change often, especially with increases in revenue or decreases in revenue, could be salaries, merchant services, or otherwise known as credit card processing fees. Those may be variable costs. You may have additional security or additional cleaning supplies. Those could all be variable costs. The easier costs that are easier to identify are fixed cost. So those are charges that don't change each period. And when we think of fixed costs, we think of things like insurance, your office space rent or lease or your mortgage, your auto loans, a business loan, things of those types of things. So we're going to look at these costs in just a few minutes on our cash flow statement. Now on our next slide, there's another thing that we all need to take into consideration, and that's the state of our world right now. And that is what we know as COVID-19. So many of us know who have been small business owners that preparing or planning our business is like a moving target in light of the current world situation. But we do have to identify these costs and the effects on our business to start talking about forecasting or cash flows as we move forward. Some of the things that we would need to consider is delays in products or manufacturing, reduced capacity for our businesses, either like as a restaurant or a manufacturing facility. Other things that are affecting our cash flow is consumer spending, the state of unemployment, and the shift in priorities for individuals and their needs and their concerns in terms of their purchasing power. Now, with that being said, we are going to look at a cash flow analysis on Excel. So let me share my screen really quick with you. This is a blank cash flow analysis, and I just want to talk through this statement really quick. For those of you who are in business, we all know that cash is king. And that is even more notable today in light of our current world environment and the uncertainty of what's happening in the business world. So let's talk through this statement, and then we're going to look at a couple examples here in a minute. So you can see on this first line, there's a cash beginning balance. So we'll know what our cash was, right, based on the financial statements that Cindy just walked you through. We can go ahead and start planning out our income from sales and returns and allowances. Now, as Cindy said, also, if we have some of this historical data, it's going to really help us to start putting in numbers that we could see may be realistic for our business. We could look at historical purchases and allowances numbers, and then we get into our expenses down here in this section. Again, you're going to have those fixed expenses such as probably your mortgage, your insurance, things like those types of things. But on this cash flow analysis or statement of cash flows, we're also going to look at if we receive new financing. So if you receive an EIDL loan or a new SBA loan, any payments on those loans. And then if you as an owner are making contributions to the business or taking draws in this equity section. So what this statement of cash flows is going to do is give us a forecast of what our cash is going to be at any given period. This is especially important, as Bob says, as they're getting into forecasting for the holiday season and even into 2021. So we are going to move to an example of a cash flow analysis and just kind of talk through what this statement is showing us. So on this statement, you can see that this business and these numbers are a little different than we used in our example. So I just want to talk through this example for you. We can see that this business, and this is theoretical historical data for a business, started with cash flow of $46,906 in January. A couple things that I want to note about this business, and so when we get to our next form, we can kind of look at what's happening. We can see that in the first part of the year that most of the revenue is kind of mid-50s to $60,000 range, with January being a little slower. We can also see in the third or fourth quarter of the year that revenues increase by about 10,000 or more per month. So just on my assumptions, I would believe that this is some kind of retail or holiday-based business, or that benefits from holiday-based sales in that fourth quarter. We can also go and look at our cost of goods sold. In these months, we can see that in September and October, our cost of goods sold are actually significantly higher than in other months, probably preparing for this busy season. We can identify fixed expenses such as bank charges and dues and subscriptions. So again, those are our easy ones, right? But we can also go through and look at our payroll numbers and see historical data for payroll. We can see that this company has payroll liabilities about the $20,000 range for the first 9 months of the year, with payroll increasing about $10,000 in the fourth quarter of the year, probably related to the demand to support those sales. We can see or take into account that this business received a $12,500 loan in March of 2019. So I would assume that this is probably a PPP or an EIDL loan, and then had existing loans, payments of this amount during the year. So this just talks about, you know, what's going in and out of the business. Now let's go through and let's just talk about January. So in January, this business started with $46,906 with cash on hand. We can see the income from sales was $44,710. Cost of goods sold is $15,782, which is a decrease from the cash, with operating expenses totaling $38,054 for the month, payments on loans of $640, draws and dividends by the owner of $500. So our cash ending balance for this business is $36,640. So our change in cash for this month was $10,266. Now this is important, right, as we all move forward, because we know as business owners, cash is king. So monitoring that cash flow, realizing where we are, being prepared to adjust and for these shortages or months where you may have more cash on hand. Now with this cash ending balance of $36,640 for the month of January, we can see that we take that money up, that cash on hand, to start our February figures, so on and so forth. So these numbers are really important for us to look, and the more historical data we have, so if we look back to 2019, 2018, 2017, the more historical data we have, the more accurate we can get as we move forward. So in our final example, we have a cash flow analysis for periods of 2018, 2019, and 2020 for this business. And we're just going to go over this really as a touching point so that you guys can kind of see what's happening. We've populated this information with the cash ending balance where this business was in 2018, the cash ending balance of 2019, and then the cash figure starting for October of 2020. Now let's look at some of this data. Now in 2018, we can see that the sales figures for this business were, you know, $50,000, $60,000 range. And this business experienced a pretty nice growth in 2019 up into about the $70,000 range. Now, when we get ready to forecast what we're looking at for 2020, and I can hear the groans right there now, what we advise is that businesses really forecast or make three plans, right? A good, a medium, and a bad. So for this example, what I have done is I've kind of just started filling some of this information in. And before we go much further, I want to show one other thing. For this example, I've created here that this business is going to be forecasting they're going to do about half of their sales from their 2019 numbers. So I'm doing the bad forecast. But in here, you can see there's already some information from payroll. So I've added this other line right here, or this other column. And what this is a percent of revenue. So what we've done is we've looked at how much is inventory purchased as a percentage of the total revenue. So in 2018, they spent $31,000, or not 31,000, 31.51% of the total revenue to replace inventory. That amount increased to 36.83 in 2019. Now, for the sake of this spreadsheet, what we've done here is I've put in our percentage here for payroll at 42.63%. Payroll is at 42.63% of revenue in 2018 and 62% in 2019. I'm guessing that as we move forward to 2020, we're probably going to be watching those labor costs more closely. So I've just went ahead and used the 42.63% number. So I've put that in here to calculate it'll calculate based on our sales. So I have this loaded with some figures or formulas just to kind of help with time. But what I've done is estimate our revenues at half of where we were in 2019. We can see that we had advertising dollars of $760 in 2019 and $220 in 2018. We could put $500 in here. Our fixed expenses are those ones that we know are consistent. So we'll just copy those over because those are likely to remain the same. So all of these are fixed expenses. We can see that in 2018, we had legal and professional fees. Here for 2 months, we had it only in 1 month of 2019. So I'll just go ahead and add in some legal and professional fees. We'll need to carry over our rent, which is a fixed cost. We'll need to carry over our telephone, which looks like a fixed cost. We'll put in some money for supplies. And then our utilities look pretty consistent, so I'll just go ahead and turn that over. Now, as you can see, and we're putting these numbers in based on what we expect to happen, we see that we're building this statement of cash flows that gives us an idea of where we are in terms of our cash flow for the year. Now, if we move further and put our loans in here, and say that we're going to take an owner draw of $500 in October, which matches our previous years. Now we have a forecast based on these numbers and our expenses of what of where we'll be for the year. Now we haven't added in inventory. So I will just say that our inventory is going to be half of these figures as well to just be consistent. So we can see that with this business, basing our revenues on half of where we were in 2019, that this business is going to have negative cash flow in October, November, and December of 2020. The good news is that by doing these figures and this cash flow analysis moving forward, you are going to be able to rein in some of these expenses. So maybe in in December, you reduce your supplies and you go a little lighter. Whatever you need to do to rein in this number, or you reduce your payroll and you watch those figures a little bit more. But by projecting your cash flow and using these statements puts you in control of what's happening with your business. So with that being said, we will go back to our final slide and open it up for questions. And I also do just want to say that all of these slides will be available on the Arizona Commerce Authority website. You will get templates of all of the slides. If you have questions, you can contact us through this website, which is coconino.edu/SBDC, and we'd be happy to answer any questions for you. Additionally, your SBDCs all throughout the state are invaluable tools in financial forecasting. All of the centers have the resources that we've provided for you today and can help you in generating those forecasts. So please don't hesitate to reach out to them to create those forecasts for your business. Thank you all for having us, and we'll open it up for questions.
Excellent. Thank you, Gina and Cindy. Great job. Great to share those numbers, those templates. Excuse me. So we have a question from David that says, what happens if your balance sheet doesn't balance, but your accounts seem correct?
So David, without looking at your balance sheet, it would be difficult for me to really answer that, but my guess is either you have something wrong, maybe wrong in your chart of accounts, or you may have a transaction coded improperly. And so I would need to look at it a little bit more to be able to truly identify that for you, but you're going to have to do a little digging. There's some either coding or account set up wrong.
All right, what other questions, folks? If you have questions, post them in the Q&A box at the bottom of your screen. And we got a few minutes that Gina and Cindy can answer some questions.
So as a sole proprietor, it's my belief, and you'd have to talk to your CPA about this, that sole proprietors take draws. You have to be an LLC with some type of designation to take a W-2 paycheck salary per se. In terms of QuickBooks, so the question is, so QuickBooks will not generate forecast? I don't believe they do. It just looks at, so that's the difference between forecasting and accounting, right? And this is one of my complaints with QuickBooks, is that accountants look at historical data, so what has happened. Forecasting is looking at what we think will happen. So we use that historical data in QuickBooks to build assumptions of what we think is going to happen in the future. But it's been a while since I've dived into QuickBooks, and I don't believe that they do forecasting. Most of your SBDCs, not most, sorry guys, all of your SBDCs have tools that they can help you, a number of tools actually that can help you with your financial forecasting and benchmarking for your industry.
Hey, Gina, we got another good question here from in the chat box from Carrie. It says, what are the first things you look at when scanning financials of a small business to see how they were doing? What categories?
You know, Carrie, for me personally, in my background's in accounting, specifically auditing, so it would be depending on what I was looking at the books for, but if I was looking for profitability, I would be looking at their net profit, number one. That's always where my mind's going, is, are you making money? But then looking at those percentage categories to see, you know, is your labor increasing every year? Is your labor in reason for what's standard for your industry? So really, you know, looking at categories that are out of whack, and anyone at the SBDCs can really help navigate that for you without knowing your industry. I can't provide you a definitive response. If you were a restaurant, it would be in your food cost and your labor. If you were manufacturing, it would be labor and cost of goods sold. So I hope that helps you a little bit.
Yeah, Gina, I agree. I'm, you know, looking at, in my experience in working with business owners and analyzing their financials, one area I've seen a lot of businesses not understand is in their cost of goods sold, and knowing how it should be related to their industry. And I've seen a lot of businesses leaving money on the table by having their cost of goods sold just off, you know, by 3 or 4%, you know, percent is a percent of revenue. That 3 or 4% can be huge dollars at the bottom of the P&L. So I'm going to reiterate what Gina said. The SBDCs have access to the industry numbers, and they can help do some industry benchmarking with you to make sure that your numbers are in line with the industry standards. And they can do it for a lot of different categories on the P&L.
So Bob, I want to just expand on what you said a little bit. So the SBDCs, so Carrie, this would be kind of a question for you, and then the one that had the QuickBooks question. There's a program that we have access to at the SBDC, which is free for us, and it's called Profit Sense. And what it does is it helps forecast your cash. and benchmarks you and runs your company through an analysis to see how you're doing. Those services and tools are free through the SBDC all throughout the state. So please lean on your centers to help you as you navigate these waters.
Additionally, with that, we had a recent webinar with APS and a new tool that they were providing for small business called Size Up Arizona. And that tool, it's free to everyone. It's sizeuparizona.com, and it can help you identify some of the basic industry benchmarks based on your industry, your location. Can narrow it down. It is a really cool tool. So if on your own you want to take a look at that, again, sizeuparizona.com. It's a free tool provided by APS. Great question so far. We appreciate it. We've got another one from David in the Q&A. Do you find impairment tests on amortization helpful to include in the income statement and balance sheet and cash flow statements?
You want to take that, Bob?
That's beyond my accounting abilities.
So I think this might be beyond my accounting abilities too. In terms, yeah, that one would be a beyond my accounting abilities and something to ask your CPA.
Yeah, so David, on that question, if it's related directly to your business, get with your CPA, run that by them. But all right, if there's no other questions, Gina, do you have any final closing thoughts you'd like to share with the group?
I just want to thank the ACA for allowing us to present today, for all of you for being here. And please reach out to either the SBDC or the ACA if we can help you moving forward. We really appreciate your time and having us here.
All right. Thank you, Gina. Thank you, Cindy, for being on here. And attendees, thank you for participating in this webinar. We appreciate all that you guys do to try to run your businesses and provide jobs and throughout the state. Small business owners are so important to our economy. We want to invite everyone to attend our next session on Tuesday morning, 9 a.m. You can register on the links at azcommerce.com. Small Business Bootcamp. Lisa posted that in the chat. This session will be posted up later today with those templates as well in the presentation, so you can go back and review it. But until Tuesday, we wish everybody to have a happy and safe weekend. Have an enjoyable weekend, and we will see you on Tuesday. So thank you and have a great day.
Thank you, everybody.